Okay, let us do a little bit of a mic check to make sure that everything is working properly. So if you're already a part of this live session, just say hello so that we'll know that okay, we're here. So you can just say hello. All right. I will not be taking too much time today. All the amount of minutes I have right now is about 60 minutes. So we'll try and make the best use of it as is. Now today we're going to be discussing about the winning trader's mindset, and I'm going to be addressing a few questions that I've been able to gather from the community and all. But let me just wait for like a few minutes, maybe like 10 minutes. Let's just wait so that we can have our people on board. So if you're on board, just say hello. So if you're on board, just say hello. Hi, Ultrasound, I see you. Thank you so much for joining us. I'm so glad you're here. So thank you so much. Hope you're feeling great today. Yes, yes. I'm glad you're feeling good. I'm fine too. Thanks for asking. It's great to have you here. And let's just wait for like one or two more people. So because you are here, the first thing I'll quickly do, because I don't want to waste any time. The first thing I'll quickly do is to go through my setup. I want to show because somebody mentioned it the other time that I did not talk about the setup I'm rocking. It's not really a big setup, but anyways, let me just quickly show you what my setup is basically. Now, the time frame, my trade time frame right now, the candlesticks is M1. So and the chart type is candles, and usually I usually enable this timer so that you can see this timer here. So I normally enable this timer so that we can just have this timer always, so that we can know how many seconds we are into a particular candle. Then if you come down to this time area, I normally use the flag mode. You know that in pocket option we have two different time mode. There's the flag mode and there's the timer mode. So I use the time mode. You can see this UTC +1 is the flag mode, and I set it to M1, and I make sure that this particular one, what do you call it now? This particular second hand, I make sure it's on 0, and that's it basically. So it's not so much of plenty setup right now. Let's load an amount for this session, and we'll be going in with 25%. Like I always say, I use 25%. I use percentage of my balance instead of using the it's a specific amounts. You understand? We have this touch area here. We may have an opportunity here if price comes to this area. So as it is right now, let's go into the lower time frame. Now, one thing I normally do when I have a third breakout is that I go into the lower time frame to look for either supply or demand. I like to combine supply and demand with third breakout. We have a supply area up here. We'll mark it as a lower time frame entry before price comes there. Let's just do that quickly. So let's go to S15 also to see if we can fine tune that entry. If we cannot, no problem. But at least we have one up there. That's the most important thing for me. Okay, fine. The S30 supply is there. So if price comes and break this level, and enters into the supply, we know that sellers can actually respond to this trade. So we'll have an opportunity here. We'll keep an eye on it. We'll set it as a favorite. You can see, so that in case we move to other markets, we will be able to take this trade. Now look at this trend to the upside now. Okay, fine. We still have a gap to this level, so we are not going to go with the sellers yet. We will wait. Now also we can use this common point of rejection, but even at that, we have common point of rejection here. But even at that, it's still not a good trade to take yet. Now if we look at this kind of basic market structure area, you know that we seem to have this market sequence of two green, two green, two green. We have a red. Let me just zoom in. Two green, we have red after it. Two green, we have another red. We have two green here. We have another red. We have two green here, another red. The same thing happened here. So it has been happening over and over again. You understand? And this one may look like a momentum, but it's just a trend. It's not a momentum. Over here, you can see right as it is. So right now, I'll be waiting. If price breaks this area, we still have a shot. We can go with the sellers. But right now, price is just moving between this range. That's why it's a kind of a ranging market. But we'll just keep an eye on it, basically. So basically that's my setup. And oh, Gemward, how are you? It's nice to have you here. Thank you so much for joining us. So if you're online with us, please just say hi. Let me shout you out quickly for the audience. Let them know that my people are here. So all right. So that's my setup. I feel like I should keep an eye on this market. Okay. I feel like I should keep. Okay, we have a demand. Oh, there's a demand down here. If we have a gap down here, we can take a good trade. Can you give us no gap up? No. Okay, maybe we can go with a common point of rejection inside this demand area. There's a demand inside here, but this gap up is in favor of the sellers, and that's why I don't want to. If the price comes into this common point of rejection, I may actually consider it, but it's going to be a risky trade. And this is another QM here. Let me check M3 to see if we have an engulf. Okay, we have an engulf. That QM, I wasn't expecting us to have an engulf here, but that QM seems to be a little kind of valid. I'll check it one more time just to be sure. But okay. Let's go to S30. If we find any entry up here, we'll take a trade. Okay. Let's check S50, S10. Okay, there's an entry up at the very top here. Let me check S5. So let me check. I saw something S30 the other time. There's a demand, there's a supply, internal supply here at S30. We'll mark it as a lower, but it's not a fresh supply area, but it kind of has a doji preceding it. So that doji is telling us something, that this area is very, very strong. But no problem. We'll mark it as a lower time frame entry. Let's see how it goes. So let's go back to M1. Now the thing there is, anytime there's this thing called QM. When you have a market pattern goes A, B, C to the upside, then push it to the downside and breaks the previous low. Now if price comes back to this area, all this area now is a very active zone. And the first thing we need to do is to check M3 or check M5 to make sure that, okay, fine. If we have an engulf and we checked M3, we saw the engulf here. You can say this is the engulf. Let me go back to M1 quickly. I really want to take a trade at this common point of rejection inside this area. If we go to S30, let me see if we can fine tune this demand. If we can fine tune that demand, that would be nice. But if not, no problem. We're not in a rush to take a trade. I know that I really don't have much time here, but it really doesn't matter. Okay, okay. I'll mark it with a line. I've seen the internal demand and it's down there. So if price comes down to this area, we can take a very good trade here, and we have a round number here too. So that's the more reason why we should take a trade down here too. If price gives us the entry, we'll take it. If it doesn't, no problem. But over here, there's an opportunity down here. And we have an opportunity up here and up here too. So this market is a very good market, it's full of opportunities. So let's see if it's going to push to the downside here. We'll take a good trade here. Okay. No, not yet. I was expecting to come down here. Yes. Is it going to give us the entry or not? Yes. Okay, fine. So we've taken the trade now. I was planning to take it under this common point of rejection, but the market just jumped. So let's see. 1 second. Okay, and that was a winning trade. That's good. Though it was very close, but it's just what I predicted that might happen. I was expecting the buyers to like reject the price. Now I would have gone with the buyers again, but we have a gap up now, so they might actually be thinking of like breaking this level to the downside. So I won't be taking any trade here again. So the first point I would okay, I can see my people joining. Yeah, if you are new to if you are just joining us, say hi so that I can shout you out for everybody. Thank you so much, guys, for joining. I'm so I'm so glad you're here. Um, so the first point I was going to make for this talking about the winning traders mindset. The first thing is, say, a winning trader is a trader that practice. When I say practice, I don't mean just practice. I'm actually talking about someone who practices almost everything. Like everything you are thinking about is your trades. Now, it may seem as if, okay, it's cliche, but I'm not. I'm telling you the truth. I practice a lot, and anytime I'm practicing with intent. I'm practicing with. There's a mindset behind your trades. I say, okay, fine, I'm going to take this trade, but you are treating that money as if your life depends on it. As if you lose that money, you're not going to be able to gain it back. You understand? And that's exactly what you want to do. You get it? Just you want to treat that demo account as if it is your money. You want to protect that bag with everything you've got. As you understand. Now, if the more practice or the more you take, okay, we have a gap down now. It's a huge gap down. I'm going with the buyers. Let's see. We have this push to the upside, and this huge gap down just happened on this round number. I'm expecting the buyers to push for a green candle here. So let's see. Let's see if that happens. I have a very I believe that like there's a high probability that will happen right now. So back to what I was saying, practice, and that practice helps you to understand the markets. It's like when you get to know an instrument, you get to the point whereby you get to know that instrument. There are certain behaviors that the market make. You understand? It's because you practice so much. That's why you're able to know how the market behaves. Or there are certain things you've seen before, and you know that, okay, fine, okay, that was a losing trade, but it's not. It's all well and good. So basically, That's exactly my first point. Now, some might be thinking, okay, anytime I enter the market, what do I practice? I'm going to show you in a second. Let's go into another. Now, the first thing I'm looking at this market, but I'm looking at like the past 30 minutes. I mean, the past 30 candles, the past 50 candles. You understand? You see, there's these big boxes here. Those big boxes mean something. I know a lot of people don't pay attention to it, but I do pay attention to every detail. Yeah, you see all these big boxes in the background. You can count all the candles between one line and the other. Let's count it now. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Let's just say it's about 16 minutes or 15 minutes. You understand? So it means that this two of these candles now is the past 30 minutes. You know, four of these candles now is the past 1 hour. 1, 2, 3, 4 is the past 1 hour. You can check this, just these four boxes, and see how market has reacted to each other. Let me show you something. What I mean over here now is one of those things I do in my practice session. I'm just showing you. You see, we have a demand here. This area is a demand area. Let's mark it as a demand area. But over here right now, you can see that the buyers are responding. Those are the first things I check. Supply and demand. Because supply is where the sellers are. Demand is where the buyers are. You want to be able to like know if the buyers area and sellers area are working. If it's not working, then you don't have a business trading that instrument. Just leave it. Go to another one. Thank God we have plenty of it. You can see we have plenty of it. But look at this, we have a demand area here. Price comes into that demand area. The buyers engage. You can see. Those are the things we want to check first. Now we have supply up here. Let's check this supply now. I'll show you. You see, this is the supply area up here. Price comes into that supply. It what? It rejects. The sellers reject it. It tells you that this market is normal. It's acting normally. There's another thing I want to quickly show you. Here we have a big QM. There's A, B, C to the downside, then push to the upside, breaking the previous low. Price comes back into that QM area. You can see they make a demand area. They what? They reject. They go up. The buyers go up. This is how you take your trades. And now, let me now show you another thing. Down here, we have another demand. Price has not touched it, so it's a fresh demand. You can see. But I can bet you if price comes to this area now, we have a good opportunity. Why? Because the previous demand area, you can see. Now, some people call it buyer's entry. Yes, it's buyer's entry too. You get it. When you connect some of these demand and supply areas, or especially in a price action territory. Let me show you what I mean. Clear all this. Over here now, you can see. Over here, you can see. This is buyer's entry, buyer's entry, buyer's entry. But here now, the price came into this buyer's entry. They are not respecting it anymore. It tells you that this area, what the buyers here are tired now. They've been used up. You understand? Most of them have been used up already in this buyer's entry. So there's every tendency that this buyer's entry may not work again, or you understand the buyer's air might just be slow to responding. But it's part of those things that will help you make decisions in the market. Apart from just like looking out for your strategies. You know, I've not even talked about strategies now, but that's the winning trader's mindset. Your mind, the way you think are in the market has to change for you to be profitable in the market. You understand? The way your mindset, the way you think, you have to think differently. And also, you can see we have this is a break. But now let me show you something. Somebody was asking me about decision points. This you see this break of structure is a decision point. This area is a decision point, and I'll show you why. If you go to the lower time frame, let's go to lower time frame now. We'll go to S30. You check this area where the market was broken. We'll keep checking. We'll find a supply area there. You can see we've not this is a supply area, but it's not fresh. So what do? We keep going down. Okay, fine. We found one, a very good supply area here. If price comes back into the supply area now, we can take a good trade, very good trade, and we're more likely to win this trade. But usually, I wouldn't take the supply area under the entry points. Yeah, I prefer one here, so I will go down into S5. Let me see if I can find one up here. If I cannot find anyone up here, no problem. But look at this. You see this overlapping level is also a what? It's also a supply. And I saw something like that in like I think S15. Okay, there's one here too. I found one here too. I know I found one in S15. So like that's the mindset we should always have in the market. It is very, very important that the way you think is different from the way every other person thinks in the market. If you are going to, because you want to be able to trade with confidence. You don't want to be guessing. You don't want to be hoping. You don't want to take your trade and be hoping as if I hope this trade wins. No, you want to be at least sure to a very high extent that okay, there's a reason why I took this trade. I may lose this trade, but at least I know the reason why I took the trade. That mindset you want to have. You get that's the mindset you want to have in the market, basically. Now, if price comes back into this area now, especially the one coinciding with this trend line, I can tell you this middle one up here. Let me mark everything. This middle one would have a very good. So what I'm going to do now is what I always do, anyways. I will mark it as a favorite. So let me check the other one I marked as a favorite. They've reduced the payout amount, but no problem. We'll check the other markets now. Now, I love markets like this that have this long wicks. Anytime you see markets with long wicks like this, just know that your bread and butter has come. Why? Because you can take trade. They call it what they call this thing. Common point of rejection trades. Yes. Why? Let me show you. Over here now, we have a common point of rejection, but down here, we have what? We have a demand area. Let's mark it as a demand. Now, remember I said demand areas are where the buyers are in the market, and now we're expecting buyers to reject price from here. There's another trend line up here. You can see. So we can mark this common point of rejection over here. Now, usually what I would do is, okay, let me take this one. I wanted to take a trade above this round number. I normally combine common point of rejections with round numbers because the in my experience that's what works for me mostly. So this second trade, I'm not really too confident on, but this first one above this round number I'm very confident about it. You understand? So we have common point of rejection and we have this round number here. Now the reason why I prefer trading above or under round numbers is because round numbers sometimes act as a SNRs. They act as support and resistance. So anytime price comes into a round number, I can bet that there are some traders, there are some buyers and sellers waiting around for their orders to be fulfilled. It's just like the way human beings think. You get the gist. Thank you so much for joining us. If you are just joining us, signify by saying hi in the chat so that I can give you a shout out. Thank you so much. And if you are yet to subscribe, go ahead and hit the subscribe button now. Let's do it now. Guys, let's do it now. If you are yet to subscribe, click the subscribe button. We are trying to get to 1,000 subscribers, and I know we definitely can do it. So thank you so much for subscribing. So back to the explanation I was just doing. We just won. So far so good. Now we won 1, 2, 3, 4, 4 trades. You understand? And we won 3 out of 4 trades. You understand? And that's how it is, basically. You understand? We need to get to that point where we know the reason why we took the trade. We're not just guessing. We're not, excuse me, we're not trying to say, oh, I don't know why I took this trade. This and that. No, you know the reason why I took the trade. It's simply because you have an understanding, and that understanding is exactly what we need. We're trying to teach ourselves right now. Now, the reason why we took this trade, you remember that I said it's common point of rejection. Anytime you see markets with long wicks like this, some people call it bad market. I call it bread and butter. Why? Because I know that these kind of markets, they are the jam when it comes to, especially when it's a ranging market like this. It keeps ranging up, down, then up, then this one has not come down. But if it's going to come down now, we know we have a demand area down here. If price enters inside this demand area, we can take a rejection. Now what we can do to fine tune that demand now is to go down to lower time frame. You can say I'm looking for, hey, I found it. This is the internal demand. Sometimes I'll mark it in my markings. I'll call it a lower time frame entry, LTF entries. So that's what I call lower time frame entry. We'll mark it as a lower time frame. This is the color I normally use for lower time frame entries. So this is exactly how it's going to go down. Then we'll go back to M1 and we wait. Now, anytime you are in this kind of market, you need to observe the market and look out for certain things. Like I can see certain market sequence now. Look at this. We have two red candles, then green. You can see two red candles, green. We have another two red candles. We have green following. If we have two red candles coming down now, and we have a demand area down here, we know that yes, this trade is going to be valid if price comes down. So what do? We'll mark this one as a favorite. We'll go back to that previous one we marked. Okay, that decision point trade that we're about taking here, it has not happened. You understand? Now, if it was this thing, this AUD CHF. So I have my big screen right here. I'm going to put a a notification, like a kind of a time an alarm here, so that it will tell us when price comes into this area. Just right above this ABC to the downside, I put a notification here. You understand? Just for us to see. So I have my big screen in front of me. Some people always say, why do I trade? Why do I just trade on my phone? It's because I really enjoy trading on my phone, actually. And right now, that's what I actually started with. So I prefer to just trade on my phone. Now, let me know, guys, if you prefer I trade on a PC better than I would trade on my phone, because if I have enough requests on that, I might actually make the switch eventually. But right now I'm going to keep it at what it is basically. So let's look at the other markets. Okay, this was the previous market we were in. Now you can see they've made a decision to push the price to the upside, and that's fine. There's no opportunity here right now. We don't need to stay in this market. We just move on. So here we have this push to the upside. We have a doji here. Now, if we start making a range here, then we'll know that okay, fine. We may have if we have a gap down. Okay, there's no. I was going to go with the buyers. Oh, is I okay? Let's go with the buyers. The reason why I was thinking of going with buyers is because number one, we have uptrend. Let me just clear this. Number one, we have uptrend. Let me show you again. It's uptrend and it's very healthy uptrend. Now, the amount of red candles I've seen up to this point now is just two red candles following each other, then green. Now, here also, we have two red candles, so market sequence, you can see. Then another thing is that you see this area is a demand zone. Though it's a very weak demand zone, but it's still a demand zone. And then we can combine it with the fact that we have an evening star here. You understand? And this evening star is they usually retrace. They usually have a retracement. So I'm expecting the buyers to like push this price. Oh, come on. That was very close actually. So the last 2 seconds, but no problem. So we lost that trade in the last 2 seconds. I guess maybe they've made up their mind to like push the price to the downside, so we lost that trade, and it's all right. Losses do happen, and you have to be you have to be okay with it. So, okay, let's go to the lower time frame. I want to see if okay, now this is what I used to talk about. If I had gone to lower time frame ahead of time, I would have taken my trade down here. I would have taken a trade down here instead of taking it where I took it. Let me show you. You see, I would have waited for this entry. This is a better entry. It's a lower time frame entry. I would have waited for this. I would have just waited for this, but no problem. There's a lower time frame, the better entry down here, and that would have been better to take a trade inside this. So I think they've made up their mind to like. Now we have a doji here. Let me mark this doji. I'll mark the shorter one. So I think they want to start they're in a kind of ranging market here right now. So if we have a doji break to the upside, we can go with the sellers. And why would I do that? Is because we've been making lower highs and lower lows. Lower high, lower lows is an indication of trend reversal. Yes, we're in an uptrend, but this trend is reversing right now. You can see, and we want to catch it as early as possible. But now that's number one. Then if we have a gap up, it will be more reason why I should take this trade. Then also, if we have a gap up on a round number, especially either this round number or this round number, fine, I can take a trade like that. But if I have a gap down, okay, no gaps, so I'll wait for margin of safety before taking this trade. I'll take it right here. If it gives me the opportunity, fine. If it doesn't, then we are not taking the trade. It's as simple as that. Because we have a doji break, yes, but I'm expecting margin of safety because all the markets so far, they have this week towards the up and the downside. You understand? So if it doesn't give us that entry, we are not going to take the trade. So it's as simple as that. There's no need to like worry or bother about it. I'm expecting the price to come here, and if it doesn't do that, I will not take the trade. And it's okay to to miss out on certain trades. Okay, let's take it now. It's okay to miss out on certain trades. If it comes to this round number, I probably will take more. So let's see. We have 5 seconds now. Okay. So that's just it basically. Now you can see this. The candle it gave us here was a very very small candle. Now and you can see it gave us another gap up. So it tells us that the sellers can come in, but I'm not going to take this trade again. We'll look for other opportunities. That's simple. Now, my second point, the second point I want to make when it comes to a trader's mindset, the winning trader's mindset, is that your expectation of the market should be subdued. Let me explain what I mean. Now, sometimes if the expectation you have in the market, you need to don't expect too much from the market. The reason why I said so is because there are certain times where you think, okay, you are going to make double the amount you start with. No, you see some people, they will enter with $100 and they'll be expecting to make like 1,000, 10x, which is very fine. You can actually make 10x. You understand? But the thing there is, if you are not like a pro level trader, that already understands the ins and outs of the markets, don't bother yourself over expectation. What puts you on the edge. You don't want to do that. No, don't put yourself on the edge. Sometimes when you make 30% of your balance, you are good. When 30% is a lot. Now I think about profit and loss in the terms of percentage. It's better to think of your amount in percentage. For example, if you start with 100 and see we've gotten to 141.75 dollars, you are good. You are, trust me, 1 2 3 4 5 6 trades, you only have 2 losses. If you take 5 or 6 trades, you should be ready to leave the market. Yes, just Don't bother yourself. Right? Just say, okay, I'm done for today, and that's it. You some people don't make that kind of amount in 1 hour. This is just less than 1 hour, but we made $40. We're good. You understand? Now you can come back in another session. Now you can decide to take just two sessions, maybe one in the morning, one in the evening. It doesn't matter. It doesn't have to be morning or evening. What I'm trying to say is you can decide to take a session now, then take another session later. It's fine. You understand? You sometimes you see my trades. I take like 4 trades. I'm done. Why? It is because, see, the human brain is not designed for this kind of work, like this consistent hammering of, you're trying to calculate every move. No, the human brain is not designed for that. You're going to mess it up. After a while, your emotions would take over, and you don't want that to happen. You don't want your emotions to rule the market. You want to be in control. You want to be able to breathe freely when you're taking your trades. And these are the things that help traders in the market. I'm telling you the truth. Yeah, there's one other thing I wrote down somewhere. Let me see. Okay, good. Now, one more thing I want to say. When it comes to when it comes to learning of strategies, you need to take it one at a time. You cannot learn all the strategies that sometimes it will shock you. It will shock you that there's been a time whereby I remember when I was learning QM strategy. I think just QM strategy. I kept learning just one strategy in the market. I kept looking out for QMs 3 months. That's about 90 days. I will enter the market every day for 90 days. I was only looking for QMs. Now, if I spot a QM, I know what a QM is. You understand? I can easily spot a QM. This is a QM. This, though it looks cute now, it's not a clean one. You understand? But that's how it is. Okay. Uh, market eventually came to our entry, but this push to the downside is too strong. I don't want to go against it unless we have. Okay, I still don't want to go against it. I still don't, because it's been touched already. So if we have a gap down now, maybe we can go with the. Oh, there's a common point of rejection here. If we have a gap down, oh, see that push. You see, our area worked. Our lower time frame entry worked here, but it's fine. It's fine if you lose out on certain trades. Now, it's also fine when you don't see everything at once. I can tell you, you understand. I've been doing this for many years, and I don't see everything at once too, and it's fine. It's all right. Don't beat yourself to it. Rome is not built in a day. Over time, you will get used to it, and over time, you will be able to see things as at a glance. But until that happens, be patient with yourself. You understand? Some people go, for example, some people go to school, they learn medicine for 7 years, sometimes 8 years. You have to really, really perfect their craft. So if you take about 2, 3 years, sometimes 4 or 5 years to learn this, it's a lifelong skill. You understand? Once you know it, you know it. Nobody can take it away from you. You get the gist. And that's the more reason why you should put everything you've got into it so that you can learn it and understand it. Understand how everything works. Because you can actually learn it. So back to what I was saying, there were for more than 3 months, I was sitting with just one strategy, and I kept looking at the market for QM trades only. I'll find a QM and I'll go to M3 to see if we have an engulf. If we have an engulf, fine, I will investigate further. If we don't have an engulf, I won't bother myself investigating. I will just know it's not a valid trade, and that's it. You move on. You go to the next market, you look for QM, you go to the next market, you keep looking for QMs. That's how I trained myself for more than 3 months every day. Now look at this. Now what do we see here? This is a third breakout. It's because over time now, my eyes have been used to it. You get it? So you can easily spot certain things. It's called a when you're able to pattern recognition, when you're able to recognize certain patterns in the market within a very short period of time. Why? Because you've practiced it so much now, you understand it, you can see it at a glance. We have here now, we have, look at this level. We have first touch low, second touch lower low. The price comes into this area. We are going to go with the sellers once price closes above this level. It's a no-brainer. And also we have a healthy trend up here. You understand? It's a strong trend, but I know that we would have a very good opportunity to take our trades here. It's as simple as that. Now, let me give you another example. Now, over time, I learned also that when you have a third breakout, you can look for, especially somewhere here, you can see, you can look for supplies and demands. You understand? This is a supply area now. We'll mark it, we'll extend it. Then we'll go down, we'll mark it as a supply. This is how I mark my supply. So what happens here now is that if price comes into this area and breaks this level and touches the supply, I know that sellers, they are going to respond. So I'll be waiting patiently for this. And what do? I'll just mark it as a favorite. It's as simple as that. Then I will leave the market and in search of other things too. That's how it is. Hey Ziva, how are you? It's glad to have you here. My people are here already. Thank you so much, Ziva. I'm so glad you're here. So that's how it is basically. You understand? Um, so we have an opportunity right here, and we are combining this third breakout now with this supply. It's as simple as that. You get the gist. We go back into the now. Let's go back to all the markets that we marked. I know we missed out on some of them, but so it's all right. You need to have this very free mind when you're in the market. Okay. Oh, this dodgy break happened, but we probably wouldn't have taken this trade. Why? Because of this gap up. You can see this gap up is in favor of what the sellers, and the buyers came in. Though I would have taken this trade. Now, guys, let me. There's this new strategy I'm working on. See, let me quickly show you because I've not named it. You understand? Maybe you guys can give me a name. You understand? If you are joining us, send me just send a message into the chat. Let me know you're here so that I can give you a shout out. Thank you so much, guys, for watching. I'm so glad you're here. Thank you so much. So over here right now, we have this engulf, but then we have this opposite candle that comes. Now we have another opposite candle that did not break this long candle. So some people call it this long candle theory. You understand? Some people call it this long candle theory. Yes, Gem World. I'm in total agreement with that. Thank you so much. So now anytime you have an engulf and you have two opposite candles that did not break this engulf candle, you can go with the same. If this one was a green, you can go with it. If it was red, you can go with the opposite candle. And most of the time, at least more than 70%, when this happens like this is it. You have an engulf, you have an opposite candle, another opposite candle, but did not break this area, you go with the sellers. It has happened several times, and I've taken a lot of trades like that, winning trades. If I was in the market, I would have taken this trade. Though we have a gap down, maybe that would have deterred me from taking the trade. But under normal circumstances, I would take this trade. That's just the way it is. So let's go back to all the favorites that we. Okay, fine. You can see now price is coming into our area. Let me see if I can put a notification there. So if I can put a notification there, that would be nice. Okay, I've put a notification right under this round number. If price breaks this round number and comes here, we'll have a very good trade. We'll have a very, very good trade here. There's no problem. Let's check the other one. Okay, you can see that our trade worked. If we were in the market, we would have taken this trade. You remember that supply area we marked at the beginning? There's another one here. So you can see two trades now we've missed. This one work would have taken the trade right above this round number and to have retraced, to have closed here. You understand? Would have taken one more trade here, it would have closed down here too. Just like that. This is how we take our trades, you know. The best trades are the trades that you just wait and it comes to you. You don't have to stress over it. Just just look for your setup. You understand? Mark your setup and wait for your trades. And you'll be so surprised how trades will happen. So those are the mindsets that most people who actually win in the market. Hey, hi. It's nice to have you here. Thank you so much. Thank you so much. Uh I'm so sorry, I can't pronounce your name, but thank you so much. I hope you're feeling great today. It's nice to have you here. I really don't want to butcher your name. So, but thank you so much. I'm so glad you are here. Thank you very much. Yes, Emesto Fumero, I'm so sorry for butchering that name. Thank you so much for joining us. I'm really happy to have you here. Thank you so much. Uh, so the next point, let's quickly go to the next point. Okay, fine. Now, there's one more thing when it comes to practice. I want to really teach us today. Anytime you are in a demo session and you are practicing and you've made an amount that you think you're comfortable with in the market, practice walking away from the market. You see, a lot of people find it very hard to just walk away from the market. And I found those are part of the things I struggled with, in my early years when I started. I because I was winning, I just felt okay, I would just keep winning. Yes, you see, that kind of emotion is real. And you need to understand that. See, it happens like that. You get the gist. Exactly. So you need to just understand that it's one of those things. Just practice walking away from the market. You understand? It's not a big deal when you just say, okay, fine, I've gotten to 30% and I'm walking away from the market. Yes. See, the thing there is, the things you do in your demo account, in your demo sessions, they have a long lasting impact on your real sessions. Now, you may not know it, but your demo sessions are more like your training ground where you train your mind. Now, if you train your mind enough, if you train your paradigm enough, when you are in your real sessions, it becomes your autopilot, so to speak. So anything you do in your demo sessions, you notice that the mistakes you make in your demo sessions, you make it also in your live sessions. Those are the things you need to really work on. You understand? If you notice that there's a consistent mistake you normally make, the demo session is the time for you to work on them. Yes. Now we have another third touch here. Look at this. We have first touch high, second touch high, high. You can see the price comes down and break this area. We have a good trade. Now, not just that, we have this common point of rejection that is running down here. We can combine it. If we go to lower time frame, we can look for a demand inside this area. You understand? And you'll be so surprised that that's how it works. It's going to work. You can see there's a demand down here. Let me see if we can mark it before price comes down there. And it's a very strong demand. Why? Because it is doji. So we'll go back to M1. We'll mark it. So we'll mark it as a lower time frame entry. That's how it is. So we'll come back, we'll wait. Now over here, now this momentum is a strong momentum, so we need to be careful if price comes down. But if we have a green candle here, this green candle has broken up this momentum. So if we now have an exhaustion candle that comes down, first we can take a trade. If the price pushes down here and touches this round number, we can take a trade here. Even if it's a rejection trade, we can take it. You understand? And if the price breaks this round number down here, we will gladly go with the buyers. Why? Because we've seen all the indicators. You get the gist. Now over here, now look at this market. We have one, two, three, then we have red candle. We have two green red, two green red. If we have these two green now, we can go with the sellers. Why? Because we have a downward trend already. You get the gist. But let's just wait and see. I'll prefer to go with the buyers down here. Down here. I'll prefer to go with the buyers. So let's just wait for this particular trade and see how it goes. Now, if we have a gap up on this round number, I'll wholeheartedly go with the sellers because the sellers are strong. No, I'm not going to go with the sellers again. I'm not going to go with the sellers again. But let's just, I'll just mark this as what, okay, it is favorite already. Let's check all the favorites and see. Okay, there's no opportunity here. We'll check this one too. Okay, there's no opportunity here also. So the trend is coming down, so we cannot go against the trend right now. Though, seems like a third touch here. First touch high, second touch high, high. Price breaks this, but it doesn't seem like a good trade. You know, there are sometimes when you look at the market and it's not a very good trade, you don't have to worry about it. You know, this is not a good, it's not a very good trade, so don't stress over it. You understand? Let me check the rest of the. Oh, well, oh, this is our third breakout we were waiting for. Oh, can you see? Okay. Okay, we probably would have lost that because I would have gone with the buyers on this candle, this particular candle. But we have a gap down. I probably wouldn't have gone if I'd seen the gap down. I would have gone on the next one. So it's still a good trade, anyways. Because this gap down, I wouldn't. Is in favor of the buyers. I wouldn't have gone with this. Oh, my people are here. Hey, Aliyu Kazim, how are you? Uh, yes. The thing there is, if you want to join the Barter-Pro mentorship, join the Telegram channel. I have the links in the description. You can just join the Telegram channel and yeah. Now, guys, please subscribe to the channel. We are trying to get to 1,000 subscribers. I know you guys can do it, so I trust and I believe in you guys. So just hit the subscribe button right now. Let's just do it. Like, let's just give this algorithm. Let's just give it a headache. It's been a while. This doesn't have any headache. Let's give the algorithm, the YouTube algorithm, a lot of headache right now. Yeah, let them know that my people have landed. You get the gist. So if you want to join the Barter-Pro mentorship, join the Telegram channel and let's see how we can work things out. You can message me directly on the Telegram channel. I have links in the description. Just click on the link. It will take you directly to my Telegram channel, and you can send me a direct message right from there. So we can definitely make it happen. Yes, definitely. Yes, Ali, definitely we can make it happen. Just send me. It's in the description. It's in the description. The link to the Telegram channel is in description. So just click on it, and that's it. You know, you can send me a direct message. Then we'll be able to discuss better. So, thank you, Ali, for joining. I really appreciate it. It's nice to have you here. It's really nice to have you here. Definitely, definitely. You can make a difference. So don't worry about it. It's gonna happen. So I'm trying to see if we can take one more trade before we end this session. So let's just see if we can take one more trade, and if we cannot, no problem. You know, we don't have to force any trade. Let me check the other markets to see if we have other opportunities. I'm seeing a very good QM here. Let me clear all this. You see this A, B, C to the downside and push to the upside. This is a QM. and it's a very good QM. But for us to know if it's valid, we have to check higher time frame. Let's check M3. You see, we have an engulf here. That's our higher time frame confirmation. Then we'll go to lower time frame M30. We're looking under this zone now. Yes, there's a link in the description. Definitely. So we'll go to lower time frame here, F30. We're looking for an entry right under this area. So I'll go to S15. Let's see if we can find an entry. Oops, we'll need to redraw that one. Okay, there's an entry here, but I need a very fine entry. So I'll go down again. Okay, now you can see this is a beautiful entry. If price comes here, we can take a very good trade. This is a very good. This is a very good entry. We'll mark it as a lower time frame entry. So you see what I'm talking about now. You sometimes when you want to practice, you practice just one strategy for a very long time. You understand? You can practice for the next you can practice one strategy for the next 90 days consistently every day and non-stop. And eventually you just realize that things that you were not able to see in the market before, now you can see it clearly. So if price comes down here now, we have an opportunity here, especially under this round number. You see this round number now is with 2 zeros. If price breaks into this round number, we can take a very good trade. We'll take the trade right here. The price will just reject and close up here, and we'll win. So that's exactly what I'm waiting for right now. So I'm going in with 35%. I will wait for this trade. You understand? Let's all wait for this trade. And there's one more point. Okay, the last point I'm going to make is that you need to be mindful of losses in the market. Let me explain in a very simple way. There are sometimes when you need to understand that every time you click either buy or sell button, it's a risk you are taking. You understand? Is a risk you are taking, and because you are taking a risk, you need to understand also that losses will happen at one point or the other. Now, because losses are going to happen, you need to be mindful of it. When you are taking a particular kind of risk, make sure it's an amount you are willing to lose for a trade. Now, I know that a lot of people, they just want to make fast money. They just want to quickly. Yes, but trading is not a get rich quick scheme. No, it's a lifelong skill. It's a skill that when you gain that skill and you are able to understand and manipulate the market the way or at least respond to the market accordingly and make certain kind of profits, it's life-changing. I can tell you for a fact, it's life-changing. You get the gist. And you need to understand that losses will happen, and because you are mindful of it, don't use an amount or don't trade with an amount that you are not willing to let go. You understand? And there's certain things called risk management. Because you are taking a risk, you want to be able to manage your risk. If you know that $1 is all you can trade with that $1 consistently until you've gotten to a level whereby you can increase that amount and you're comfortable losing that amount. Because you can take a good trade and still lose. It's very possible. I'm telling you the truth of the matter. And because of that, you need to be able to get to that point whereby you are mindful of risks. Losses do happen, yes. And because you are mindful of that, you won't let it bother you too much. You get the gist. Why? Because you are using small amounts, especially at the beginning stage when you don't know too much. Don't risk too much. You're welcome, Aliu. So that's just how it is basically. You understand? And it's one of those things I really want you guys to be mindful of. I was expecting this trade to touch now, but it hasn't. I'll be ending this trading session. You understand? And thank you so much, guys. I'm so grateful for you guys. Um, um, I hope we'll have another live session like this, probably before the end of this week. I would join the Telegram channel if you have not, because I'll be posting the time we're going to be doing another live in the Telegram channel. And if you have not subscribed to the channel, please click. I don't know what you're waiting for right now. Click that subscribe button. Let's get it up to 1,000. Let's get it up to 1,000 subscribers. Yes, I know my people can do it. So thank you so much for that. And uh so for everyone who has joined us, who have given us shout outs, Gem World Ultrasound, I'm so grateful. My guide, I said hi, but I wasn't able to pronounce your name. I'm so sorry about that. Then Imestor Fumero, thank you so much. Aliu, I'm so grateful. Send Aliu, send me a message on Telegram, and let's see how we can work something out for you. Okay, so I'm so glad you guys are part of this session, and see you in the next one. Peace.